A warm welcome to all. Myself Devika Dileep, and the topic today we are going to discuss is cooperative societies meaning, different types of accounts prepared by them, and in what manner they differ from other accounts. Cooperative technique in our country is as old as human history. Kautilya's Arthashastra maintains that during the days of Maurya Empire, a village functioned as a social cooperative unit. Works of public utilities such as temples, public halls, nesting places, dams, etc., were constructed by the villagers as a common obligation. A cooperative society is a special type of business organization, different from other forms of organization. The term of cooperation is derived from the Latin word coopere, where the word co means with and opere means to work. So co-opere means working together. So simply, those who want to work together with a common objective can form a society which is termed as cooperative society. It is a voluntary association of persons who work together to promote their common interest. Its work on the principle self-help as well as mutual help. The main objective is to provide support to its members. Nobody joins a cooperative society to earn profit, and as it is an autonomous association of persons to meet their common objectives, it functions in a democratic way. The philosophy behind cooperative society is to serve the common man and to liberate him from the oppression of the economy, strong people, and organizations. Cooperative society means an institution registered with the Indian Cooperative Societies Act 1912 or relevant acts of states. It is an association of persons who voluntarily pool their resources for utilizing them for the mutual welfare of members itself. A cooperative society is a voluntary association that started with the aim of the service of its members. It is a form of business where individuals belong to the same class join their hands for the promotion of their common goals. The main ideology behind a cooperative society is all for each and each for all. So there are some of definitions provided by experts regarding a cooperative society. The first ever definition of a cooperative society was provided by H. Calvert. He says that cooperation is a form of organization in which persons voluntarily associate together as human beings on the basis of equality for the promotion of economic interest of themselves. Then C.S. Stackland says that every group of individuals associated to secure a common end by joint efforts may be said as cooperate. Will Mehta defined a cooperative society as cooperation is only one aspect of vast movement which promotes voluntary association of individuals having common needs who combine to the achievement of common economic needs. Seligman gives a different view that cooperation means to avoid middlemen in the chain of distribution and competition in business. The International Cooperative Alliance gives an official definition in its meeting at Manchester in 1995. It provides a definition that a cooperative is an autonomous association of persons united voluntarily to meet their common economic, social, and cultural needs and aspirations through a jointly owned and democratically controlled enterprise. The features of cooperative society. The first one is voluntary association of persons. Every cooperative originates from persons who have a common objective. It is purely voluntary in nature. An individual enjoys freedom in joining and leaving the concern. Second one is autonomy. A cooperative believes in autonomy. Members of the organization should get all powers and rights to conduct the business for their mutual benefits. Its ideology is against any interference from outside. The third feature is joint ownership. A cooperative assures joint ownership of their members. The assets are owned by the members jointly and they do business for themselves and share its benefits. Then democracy. The management of a cooperative is vested in the board of directors who are elected in a democratic manner. In every cooperative, every member has equal voting rights. The fifth one is concerns for community. A cooperative doing business for the benefits for its members. At the same time, it is also has a social objective. It is work for the development of economically weaker section of society. Service motive. Cooperatives are business organization, but the main objective is to render all service required by its members. The seventh features of a corporate society is equality and equity. A cooperative distributes its benefits in an equitable manner and it ensures equality among all the members. The last one is cooperation and universality. Cooperatives do not exploit their customers, so there is no competition among them. They believe in cooperation among themselves and they consider the world as a family. Some of the examples of a cooperative societies are producer cooperative societies, consumer cooperative societies, credit union societies, housing cooperative societies, etc. The bookkeeping of accounting. Bookkeeping may be defined as an activity concerned with the recording of financial data relating to business operations in an ordinary manner. Bookkeeping is the recording phase of accounting. Accounting is based on an efficient system of bookkeeping. Following accounts usually maintained by the cooperative societies are daybook journal, daybook cash account, daybook cash with adjustment column. So, what is a daybook journal? Daybook is a book of original entries. In a daybook, all types of cash or non-cash transactions are recorded according to the principles of double entry system. As per the practice followed in the cooperative societies, a separate journal book is not prepared, rather all transactions are directly recorded in the daybook. Daybook has two sides, receipt which is a debit side and payment which is a credit side. And there are two columns each side of a daybook, one for cash transaction and second for the adjustments. Transaction for the cash receipt and cash payment are recorded in cash column and payment side respectively. Similarly, entries are done in the debit and credit side of a daybook in the adjustment column. Daybook, a ledger for cash book. Since all the cash transactions are recorded directly in a daybook, it might be called as ledger account of cash book. Ledger. In the cooperative societies, posting of ledger is not done on the double entry system. Receipt side of the daybook on debit side of the ledger account and payment side of the daybook post on the credit side of the ledger account. How a ledger account is closed. In the corporate societies, balancing of a personal account is done at the time when any member clear his account or a new account is opened. Total of all other accounts are kept as it is. Balancing of receipts and payment accounts are not required. Receipt and payment account. A receipt and payment account is a summary of a daybook and prepared for a specified period. Receipt and payment account is prepared from the totals of receipts and payment sides of the ledger accounts. Final statements are a part of the process of financial reporting and are drawn up with the objective of exhibiting truly and fairly the profitability and the financial position of the entity. Activity-wise, trading accounts for each of the non-credit activities will have to be prepared in a register form before preparing a summary trading account. The financial statements of a corporate societies would include the following statements: trial balance, trading account, profit and loss account, and balance sheet. What is a trial balance? The trial balance, which is an extract of balances in all the heads of account in the general ledger and cash and bank balance, is to be drawn up on a monthly basis. The format of the trial balance given hereafter incorporates opening balance, debits and credit during the month and closing balances. The debits and credits shown the movement of the account during the month and the closing balances are the trial figures. Trading and P&L account. Profit and loss account prepared at the close of the financial year discloses the manner in which the amount of profit or loss has been arrived at for the year. The items of income and expenditure which arose in the accounting year are detailed and grouped under the relevant heads. The profit or loss under the trading account is incorporated into the overall profit and loss account. After the amount of profit or loss has been ascertained, it is appropriated or distributed for a various purpose. The manner of appreciation of the profit is either shown as a separate section in the pre-annual account or is prepared as a separate appropriation account. In addition to the balance brought forward from the previous period, the balance of the profit and loss account of the current period is brought into the appropriation account. Appropriation of profits involves transfer to various reserves, settling aside amounts for payment of dividends, etc. The formats of the trading account and P&L account may be used for arriving at the income and expenditure of the entity on monthly basis. Then balance sheet. The profit and loss account is accompanied by a balance sheet that shows the financial position of an entity as on the date of the balance sheet. The balance sheet is a classified summary of the balances of assets and liabilities remaining open in the general ledger after all the income and expenditure accounts have been closed by transfer to the profit and loss account. It shows the financial position of the business at a given date by disclosing the amount of capital contributed, how the same has been invested, and the values of assets and liabilities of the business as at the closes of the period. Understandability, relevance, reliability, and comparatively are the four principal qualitative attributes that make the statement useful to stakeholders. Application of these qualities results in financial statements that present a true and fair view of the financial position and performance. As we all know, cooperative society is a voluntary association of people with a common interest to achieve a specific goal. They form such entity to promote their economic interests. They perform in equality and democratic basis. Even though corporate societies are not a profit oriented business firm, still we need to know about its financial status to know about the entity's economic strength. Also, as the firm involved in economic activities, it is needed to inform its beneficiaries about its financial status. So, for that, they need to maintain several accounts and at the end of the financial year, prepare profit and loss account and balance sheet. Thank you.